Okay, recording is started. So I have Mike LaLuna here again for the second weekly tax Q&A. We did one last week, and we covered business formation. So like for an investor that is just getting started and wants to properly structure their mining business on the tax side, business formation in terms of entity selection, an S corp versus an LLC versus even like a C corp. We talked about non-US residents, what that could look like for them, nexus and state of operations. So your entity should be formed or registered where your miners are physically operating. Depreciation rules, section 168 and 179. Hobby mining versus mining as a business, active and passive income classification, how the IRS views that, audit risk, and some other privacy related things in that. So this week I'm thinking we can start out with, once somebody has all of that precursory understanding and now they've selected the entity that they want to use, then there's some more tactical steps that they're going to need to take. For one, like selecting a bank. What, and from your expertise and the clients that you advise, what, when somebody like they've decided which direction they're going to go in, where do you point them from there?
Sure. So it's been a touchy subject with banks over the last 5 years. I think a lot has changed, which is good for mining companies in general. When I first started, walking into TD Bank was a no. Walking into Chase, walking into Bank of America, they didn't want to bank Bitcoin mining companies. So we had to look elsewhere. Other sources that became available pretty quickly after doing research were Titan Bank. Titan Bank is based out of Texas. They bank the big boys, your Marathons, your Riots. They have their accounts with Titan Bank. And I know this because I've spoken with them before. They don't really want the smaller mining companies. So opening up with Titan Bank could pose a problem. So that it depends on the scale and the size of your.
Do you think that company. I know we mentioned this last time, but the concept of like presenting yourself like as a data processing company and less as like a crypto mining business.
Yeah,
that like there, because obviously, I mean, you don't want to be deceptive, but you also want to speak the language that like is going to put you in a favorable situation.
Well, technically, you're not lying by saying data processing.
Yeah,
because
you're not.
We really are. That's the category. Yeah. If you look up the NAICS code for the mining industry, it doesn't exist. It's really falling under data processing. Mm-hmm. So if you tell the bank that that's what you're doing, there shouldn't be issues. The issues come up when you've got wires coming in from Coinbase, or you're transferring proceeds or cash out to Coinbase for whatever reason. That's where some of the banks in the early years may have said, we don't know if we want to get involved with crypto. I think a lot has changed, which is favorable to new companies forming today. But another great resource was Mercury Bank. Mercury Bank was an online-based bank, very crypto-friendly, very startup-friendly. I think nowadays, most banks will probably be open to the crypto industry. The laws have changed this year. So I would say just be cautious, because what the risk is, if they don't like crypto, they could freeze the account, and then your bank is closed. That's what happens. Yeah. So that's the risk, and we don't want that to happen. So maybe you start with one big bank, and you've got a secondary checking account with a smaller bank that is more crypto friendly. That could be a recommendation that you go by. You just got to manage two different accounts. Not really a big deal. Leave $500 in one, and just let it be available in a worst case scenario that you get frozen.
Yeah.
But you're gonna need to. You're going to need to bring the formation paperwork with you after you form this company. to that bank, and you're going to need your tax ID number.
You're saying like in person?
I'm sorry?
You have to bring it in person?
Or upload it. If it's a bank that allows you to open up a business account online, a lot of them do. You'll need copies of those PDFs of your registration and formation documents. Also, an operating agreement. Even if you're the only owner of the company, an operating agreement is important for the banks as well.
Yeah. Would you say that it's important, like it could be strategic for you to almost like season your account to show that you're like a legitimate, serious business? Like if you do start your mining business, you form your entity, then purchasing certain administrative stuff, like if you need certain materials, then making sure those all go through either your business checking or your business credit, and showing the bank like a history of like, I'm doing business and I'm buying these certain things that I need to run my business, and it shows them that you're more legitimate. Did you say that that's something that could be said?
Yeah, I mean, you don't need to go do unnecessary transactions in the bank account, but yeah, certainly order checks, get yourself the checkbook, connect.
People are still using checks?
People are still using checks, absolutely. There's better ways, of course, as you know, and but you got to realize that it's an age thing. If you're an older person in business, you are used to doing it one way. Pivoting something to wire transfers and ACH or sending crypto is totally new, and they may not be comfortable with that, and that's okay. You could still operate your business under both circumstances.
Yeah. So let's say in terms of like you have your bank account set up, then you're going to need to sort out the wallet, exchange, custody setup. So maybe if you want to shed some light on like what you personally recommend, what your situation is, and then we can kind of dig a little bit deeper than that.
Yeah. So early on, there weren't too many options available. You have Coinbase that's been around for a while now. So setting up an account with Coinbase is great. They have an institutional platform to onboard your business.
Yeah.
They do charge a $5,000 onboarding fee. And the reason they do that is because there's a lot of legwork and application review and setup process. Once you're onboarded, you'll see the application is pretty intense. They're going to KYC. They want to know your firstborn daughter, son's name. You want beneficiaries on these accounts. Who are those beneficiaries? They want all the formation documents for your business. There's just a lot of questions that go into that process. That's why they charge that fee. I like them because they also have a good Bitcoin borrowing program where if you want to borrow against your Bitcoin, the rates are pretty favorable if you use Coinbase compared to other services that are out there.
Yeah.
So that's
what
you're
saying get. Then that you have the Bitcoin, so you're mining obviously with a pool, and the pool sends the Bitcoin that you mine straight from the pool to Coinbase. You don't have like a self-custody wallet in between. It just goes straight to Coinbase.
It depends. What you run up against are a couple of different things. If you have a self-custody wallet, do you have an emergency backup plan if that goes missing or you lose that wallet? What's the backup plan? How do you?
Oh yeah, I mean it's likely going to be if you're doing self-custody, it's going to be like your seed phrase, which
you can put on any other wallet and regenerate the wallet and pull out the Bitcoin. Yes, you can. But when you have it with an institutional account, there's a lot of protections that come along with that you may not get if you self-custody. So it really depends how.
What do you mean by that? You get certain
like if you die, right? And I have a exchange account like with Coinbase, I've got beneficiaries on the account. those beneficiaries are the ones that can access the funds. So there's my emergency plan. It's available, and I teach it to whoever those beneficiaries are now.
I suppose if you wanted to do that with like self custody, you would have to like manually, like whoever your beneficiaries would be, you'd have to say like, this is where my seed phrase is, and this is how you would access the coin. Like, which there's a lot of room for error in messing that up.
Yeah, exactly. So that's why you kind of want to be careful with how you think about this. And now there are other wallets that you may want to look at, like Unchained.
Yeah.
Unchained offers multi-sig wallets. It offers those beneficiary type accounts where you can have them custody the Bitcoin, and it's not on an exchange technically, but they offer a little bit more.
Can you swap, like, because obviously you're earning in Bitcoin terms? Can you, but you'll need to swap to dollar. I mean, I guess you don't have to swap to dollars to pay if you're mining with simple mining, you don't really ever have to off ramp back into dollars, do you?
Well, if you're going to need to sell your Bitcoin to cover the electricity fees,
well, let's say you're using, well, unless you're paying in Bitcoin, because you could just because with simple mining you can pay your invoices in Bitcoin.
Yeah, you guys make it easy for people to pay in Bitcoin. That is true. So yeah, there's that option.
Would it be possible for someone to go the route of not even using a bank account? If they just had a wallet, a self-custody wallet, all of the Bitcoin from their pool went straight to their self-custody wallet, and they used that wallet to pay for their operational expenditures.
You can, but what if you have expenses that you need USD for? For example, you go to a trade show in Vegas and you want to expense it through the company. You may not be paying in Bitcoin. It might be a cash or a credit card transaction, and then you're going to need a checking account because you can't pay off your credit card in Bitcoin yet.
Yeah. Would it ever make sense? Like, do you ever see people that have both? There's some people that like they want to keep kind of their Bitcoin on the side, and then anything that's like that admin stuff that you're talking about, they have a bank account and they just use dollars for that.
99% of Bitcoin companies that we are working with are setting up both. Yes, because you're going to always need the availability of a checking account.
Yeah.
To have cash. What if you wanted to take cash out of your personal account and fund the business?
Mm-hmm.
Right? Yes, you could go direct to the exchange, but if you need to pay for certain expenses in cash, you fund your checking account first and then pay cash US dollar out of the checking account for certain things that don't take Bitcoin. So right now we do need to have both. Maybe in the future it is easy to have just the Bitcoin account. In addition to the Coinbase, I like the Gemini platform. They do a great job onboarding businesses. Last time I've heard and checked with them, they don't charge an onboarding fee. They have a similar KYC. Yeah, they do a good job. No onboard fee there. Say it again. River is also great as well. They onboard institutional business accounts. So those are the three.
Is there a fee for River?
No fee for River.
So why do you like Coinbase better than River? Just because of the beneficiary stuff?
All three of them are going to have beneficiary setup. Number one. Number two is Coinbase has the Bitcoin borrowing program. If you ever want to borrow against your Bitcoin, the rates are very, very inexpensive.
Yeah. I think then the next thing to cover would be like you have the bank account set up, you have your exchange, your wallet, your custody set up. Then the next piece of the puzzle would be like accounting tools and record keeping softwares that you would need. What would you? I mean, QuickBooks is obviously a main one, but what would you say? Like, what's the next piece of the stack that someone would want to make sure that they have?
Yeah. So when it comes to the accounting side, we work with our clients on two different platforms. The QuickBooks Online is probably the best accounting platform.
Yeah.
It makes it really easy to use for somebody that's been using it. I've been using it for almost 20 years now. I had a business back in 2005, and that's when QuickBooks Online first started. So I've grown up with using it, And 20 years later, it's something that we use all the time in and out of different clients' accounts every day. So it's user friendly, but there's a learning curve if you've never seen it before. We can set up those QuickBooks accounts and get you pricing that's better than retail. But yeah, certainly if you want to do it on your own, it's possible. From the QuickBooks Online, there's the next component of a coin tracking software that we use. The one we like is Coinly.
And the purpose of a coin tracking software is to properly manage like how, for example, like when you have the moment it's mined is you have to keep track of the market value of the coin the moment it's mined in terms of like how the IRS is viewing your income.
Correct. Some pools don't do a great job of providing cost basis on each Bitcoin.
You have to estimate it. Because like Ocean, for example, probably doesn't have anything that would give you information in terms of what the price of Bitcoin was at the time you mined it.
Right.
So then you would just have to go back and see when you got the payout and basically go look at the Bitcoin price, see what it was at that time, and then stamp it, track it somewhere.
Exactly. And that could be a pain in the neck. Yeah. So that's why we use and recommend Coinly. They'll track the basis of when it comes out of the mining pool and it'll also track the movement of that Bitcoin. So, from the mining pool wallet to the exchange account to your hardware self-custody wallet, it knows the balance of Bitcoin in each of those wallets along with the basis. And if you ever sell or spend your Bitcoin, which constitutes a sale, it tracks the realized gain and it tracks the transfer fees as well. So it does a lot. It's pretty powerful. We love using it. It provides IRS documents at the end of the year, such as 1099s. It'll provide the 8949, which is the Schedule D list of capital gain transactions.
Are there, like, of all the exchanges we mentioned, you would think that some exchanges would like provide that for, like, if you're getting a premium business account, you think that they would provide that for you? Do they not? You have to get a separate something like Coinly on top of your premium exchange account with QuickBooks. You have to. Are there any offer that?
Yeah, I know with Coinbase they will have. There's a feed in Coinbase that asks where this is coming from, and once you start using it, you can kind of like sort it. Oh, this is mining income. Oh no, that one was me transferring money in, so that's just a transfer. So Coinbase does a decent job at that. I just don't like, that's a user only access point. I'm not going to access your Coinbase account as the accounting side, right? You're not giving me your passwords to Coinbase, which is fine. I don't need that. But I have view only access via Coinly, where I can then do the work that needs to get done in your mining account. But I do it through the software platform. So I can categorize things that are coming into Coinly. It shows up mining income, or if you sold or transferred, we can categorize it properly in the software.
Yeah. So I know you mentioned previously one of the things you like about Coinbase is their Bitcoin-backed loan situation, where they have one of the more favorable terms for taking out a loan against your Bitcoin. What would you say, like, what are the tax implications of doing that? What are the risks? Is the interest that you're taking on that loan deductible? I know it's going to vary based on like who you go through to take it. Like, are you going to, I know like Arch is another one. You got Unchained. I think they do Bitcoin-backed loans. You have Strike now doing Bitcoin-backed loans. You have, I think a new recent one is like lava.xyz. I don't know if you saw that one. I think they just rolled out like last week or so, and they're doing like 5%, which is half of what most other lenders are doing. I think 5% for the first like month or something for users that sign up. So what would you say in terms of the tax implications, the deductibility of the interest, the LTV guidelines, and how investors should be thinking about that?
Yeah, there's a dozen platforms out there. Ledin.io, Salt.
Yeah. Yep.
These are all reasonable providers. They're, remember the Celsius issue, where people were
Celsius doing
leveraging.
Bitcoin-backed loans?
I thought that they were.
I think they just were like insolvent. Like people that had funds on there just couldn't get them out because they were, I think, tied up in. I mean, there was like Three Arrows Capital. There was Anchor, the Anchor staking protocol that they, I think, had. I mean, it was a big like ring of interdependencies between all of these companies, and one of them goes belly up. I think Terra Luna was a big part of that in their stable coin. And anybody that had, I mean, it was just like the domino effect. And so they couldn't pay back on theirs. So I don't know if that was directly related to lending. But
it might not have been for lending, but there could have been if you were staking with them.
Yeah.
There's a name behind Coinbase, which gives you a lot of peace of mind.
I mean, they're publicly traded too. You have a little bit more confidence. Yeah.
Different level of controls with the publicly traded companies that make it a little bit more comfortable for somebody to collateralize their Bitcoin against their platform.
As like, why would someone even want to do that? Why would they want to take out Bitcoin?
If I've got really low cost basis Bitcoin, I bought it at $10,000-$15,000. Now it's worth $100,000, and I want to get cash out of it, but I don't want to sell it and cause a tax implication because it would be an $85,000 capital gain, 20 plus the state tax. So call it 25% is going out the door if you sell it for taxes.
That's your long-term capital gains?
That's long-term cap gains. Plus I just threw in 5% blanket number for states. Some states are higher, some are lower. So figure 25% is going to get lost. That's a chunk of money. You don't have to lose it. What you can do is you could borrow against it. And a safe loan to value. So if I'm going to borrow against one Bitcoin at $100,000, a safe range is between 45 and 65%. 65% means that you could take out $65,000 of cash and spend it on whatever you want tax-free.
Yeah. And if you were to do that, like a 65% LTV, then you wouldn't, like, let me know if I'm not thinking about this correctly, but you wouldn't get margin called until the price of Bitcoin were to hit 65,000. Because that's when like the value of your collateral would be, you basically be 100% LTV.
Right. So yeah, there's points where the price of Bitcoin could cause them to sell off the Bitcoin that you've collateralized. Then they would recoup the value of the loan that they gave you. They don't want to lose money, right? So if you took out,
what are the rules for that? Like, is it like Robinhood where you get margin called if you need to maintain it, like a maintenance requirement? Or
you'd have to essentially put up another half a Bitcoin to raise the value of your collateral.
And if you don't have that, then they sell it. They start selling.
Then they sell it, and you get liquidated.
Yeah. So that's essentially the risk. So like, depending on your risk tolerance, and I suppose like, if you think that Bitcoin could see a 50% drawdown, then you certainly shouldn't take more than a 50% LTV.
Correct. Yep. I mean, they'll offer up to 75. Sometimes they'll offer up to 80% LTV, but you're getting into riskier territory.
Yeah.
And if you don't have additional Bitcoin to put up as collateral, you'll have an issue. So I wouldn't go that high. I would probably say stay under 50% loan to value. Yeah. And then you could use those funds for purchasing more miners.
Tax-free. Like, you don't have to pay taxes on the line of credit that you get from your Bitcoin-backed loan.
You don't pay taxes when you take out a mortgage, when you take out a car loan. Yep. So it's the same thing. You're taking out a Bitcoin loan.
Wise debt.
Yep. And yes, the interest is a business interest, and it's deductible.
And so you typically say with that line, you go and purchase more miners.
That's one great way of building a portfolio and fleet of miners. So yeah.
And just keep doing rinse and repeat.
Rinse and repeat, grow the Bitcoin stack, and keep building that business. Yeah, that's one great way to do it.
It's similar to what they do in real estate. Like if you're
it's the same process. It's a
Yep.
refinance. Yeah, build up the equity value of your Bitcoin, right? If Bitcoin goes to 500,000, you could take out 200 grand safely in a loan and never have to pay taxes on that and go buy 200 grand of equipment. Same thing in real estate, just refinancing out when the equity appreciates, Bitcoin price appreciates, and refi out, take that investment, buy your next rental property, buy your next 50 miners with that money.
Yeah. So I think that's like one way is, I mean, you could obviously leverage your real estate portfolio to gain liquidity. You could leverage your Bitcoin stack to gain liquidity. You could leverage your stock portfolio. Like you could take out, I mean, depending on your situation, you could take out a line of credit out of your stock portfolio if you're an investor that has a big stock portfolio. The other option that I've seen investors use is like zero APR business credit cards. And how I suppose it would really just depend on if you're using a personal credit card versus a business credit card. But how does financing miners, let's just say you find an intro business credit card that's zero APR for the first 20 months. So I mean you get free access to capital for 20 months, which is a pretty good deal. How would that affect does that affect your personal credit at all? Which I think if it's a business credit card, it shouldn't. And will that impact like depreciation eligibility?
So when you take out a brand new business credit card, most likely it is tied to your social security number and not the tax ID number of the business, because the business is brand new. It has no credit history. In order to build credit history in your business and kind of get the debt off of your social security number, you need to operate that business for a number of years. And then you could
of years?
Yes.
It wouldn't just, like I mentioned before, like seasoning your account, showing that you're a legitimate business. Like, would that come into play here?
You need you need cash flow. You got to show activity in this business that's generating cash flow. It's challenging to do. So let's get off the topic of the fact that this is business only debt. This is going to be personal debt as well, because your social security number is going to be tied to that brand new credit card at the beginning. In a couple of years, if you could show credit worthiness of the business, you can apply for Dunn's number, Dun and Bradstreet. They can provide almost business credit scoring. So now you can get your personal name off of it and you have business credit that you can use to apply for credit cards. That's probably not an option right out of the gates.
Yeah.
So let's just say, all right, we open up a personal credit card, but the credit card is still, it's a business card, right? It's the name of the company that's on the credit card.
Yeah.
But it's supported by your social security number, which has credit history.
So it should impact your personal credit score.
It can, yes, definitely. But that's okay. I mean, you can.
So when you're first starting out, there's not really any way to separate your personal credit with the business credit.
I don't think that there is a way. If somebody knows of a way, I'd be all ears, and please comment and let us know. But I don't think there is a simple way, because you have no credit worthiness as a brand new company. There's no history there. So
yeah, I mean, I think there's certain things that you can do. Like you can rent a line of credit to vouch for you essentially, and then you can go to, like you mentioned, Dunn's or whatever. You can go to these different places to, like, there are certain things that you can do to get like them to communicate with your bank that, hey, these guys are legit. You can go and show the cash flow. You can go buy some stuff from Staples and say, oh, this is for running my business, and show them that you have like some sort of cash coming in, cash going out. And to accelerate that process, I think, not to it, so it won't take years. You could probably do it in a couple months if you have like the right foundation and you take the right steps. But like you said, I mean, it's going to vary based on what you do.
And there are companies out there that you could pay a one-time fee for, and they'll do the process to get your business credit built up. So I've heard of that being done. They could charge $7,000 to $10,000 to $15,000 for this service. They'll go raise you 200 grand of business covered credit card debt, and they get like a percentage of that, but they roll it into the debt. So there's ways that they could play games and set it up. It's an extreme case, honestly, to go do that, because it's the riskiest kind of debt that you could take.
Yeah, I would say if you did get favorable terms in terms of like, you'd probably want at least 18 months of zero APR, because then if you're at 12 months zero APR and you maxed out your like as much business credit as you possibly get, it's highly, there could be like a bullish scenario where miners just rip. Like it's happened before where they've ROI'd in 12 months, but for you to ROI in 12 months is highly unlikely. You're likely not going to ROI in 12 months. So once that 12 months hits and it kicks into 30% interest, which is just eating all of your mining profit, and you're going to be basically underwater, then what you would need to do is you would either need a balance transfer to a new zero interest line of credit, which is, lots of headaches involved with that. And you would need to at least have enough runway to be able to do that. Assuming you get max out in the first funding round. And then like you could, in theory, do that. Let's just say you started with 50,000 zero APR for 18 months. 18 months went by, you haven't ROI'd yet, you or it hasn't paid itself off yet, the line of credit off yet. Then you balance transfer into another line of 50,000 for 18 months. And so then you can start to kick the can down the road, but like all it would take is a balance transfer not working, and you would be on the hook for that debt burden. And if you don't have somewhere to pull to make that even, then you're going to be paying 30% interest.
Yeah, and then the accrued interest also kicks in after that period of time, and you're stuck with a large interest expense that you've got to now pay. But yeah, there are definitely methods to, get access to capital, and it depends on how much risk you want to take on.
Yeah. What do you think in terms of like deducting interest? How is that managed and tracked? Like of all the interest your business is paying, how is that the same thing as QuickBooks or?
Yeah, it goes back to using QuickBooks intelligently. Basically, you would connect that business credit card to the QuickBooks platform. It would capture all of the activity that you have on that card, all of the purchases. Every time you make a payment, if you make payments on the card and pay down the debt, any interest portion, if it's not a 0% card, can be captured as an expense, and that would all show through the QuickBooks accounting. That's kind of what we do. We do it well. We have checking account, we have credit card account, we've got the Coinly pushing the Bitcoin activity from those accounts into QuickBooks, and it's one seamless process for our bookkeeping team to handle.
Yeah, and then the other thing I'm sure this would be closely related, but obviously we're talking about documentation here and keeping proper, accurate records for the 160 or 168 bonus depreciation side of things. You just need to prove that and have proper documentation for it. You need like proof of payment. Do you need like a machine serial number? Like what all would you need? Like if I was a client of Simple Mining, I purchased a machine from them, what would I need to be able to properly show that like I have all my I's dotted and my T's crossed to prove that I can qualify for 100% bonus depreciation?
Proof that you bought the asset, and that's going to be an invoice, and then a payment showing that you actually made the payment. And if it's on a credit card, there's a line item on the credit card that can easily be shown as documentation that you bought this machine. A check that's been cleared and canceled. Banks have check images. You can use that. A wire transfer line item on a bank statement that shows the wire transfer. A transfer of Bitcoin out of your let's say your Coinbase wallet to Simple Mining. There's the timestamp. There's the amount of Bitcoin. And then it's going to your wallet. There would probably, if they got really nitty gritty, they'd want proof that you received that Bitcoin on your side. Nobody's had to go through this yet. This is just hypothetical, but in order to validate that the Bitcoin went to your company, how do you prove that? Right now, it's not very easy. But maybe a simple invoice showing paid in Bitcoin from Simple Mining would satisfy.
Yeah.
But those are the things that are really critical. You can't just show an invoice and
Yeah.
get away with that, because that could be easily fudged, manipulated. You know, PDF editing software could show a paid invoice real easily.
Yeah. What would you say in terms of, like, if you do take advantage of 100% bonus, then you're wiping the book value of it. It's going to zero. You're pulling that all into year one. Then how do you think about like the liquidity of that machine going forward? Like, do you just, maybe you personally, and like if a client were to ask you this question, like, when should I be thinking about selling my equipment? Like, should I be planning on selling this asset that I purchased at some point in the future, which then if I did get something from it, recoup some of it, the depreciation, then I would have to obviously pay taxes on that? Or do you more so take the approach of just like, when I purchase it, I'm going to capture the tax benefit and run it until it can't profitably mine Bitcoin anymore?
There's going to be cycles where, and this is just based off history, where it makes sense 7 to 8 months ahead of the halving for machines that are not going to be profitable after halving. You may want to get out of those machines. You know, and the sooner you get out of them, the more value you get out of the machine. But it all depends. What's the price of Bitcoin? If you could tell me that, I could tell you when to sell the machines, but that's the unknown. So it's just looking at history. You know, the prices of machines can start to decline as you get closer to the next halving.
Yeah.
But that makes sense because the reward drops.
Yeah. I would say in terms of like the value of machines, for the most part, they go down. Like, you're not gonna make a big check on buying your machine and flipping it and selling it in the future. I mean, there's obviously some exceptions. Like, if you look at 2021, and I mean, ultimately it comes down to hash price, because if hash price is highly elevated, then that just is going to translate into your machine being more valuable, because each hash can capture more profit if hash price is higher. And so in 2021, we saw the example where you could have purchased an S19 for $4,000 roughly at the time. And at the peak of it, I think in 2022, those machines were selling for like 12,000. And then now, obviously, an S19 is basically scrap metal. It's not worth anything. But still, I mean, anybody that would have bought that machine at 3,000 and sold it for 12,000, and they had multiple machines, they did very well on that investment. And then obviously, if they would have taken, which 100% bonus, I don't think in 2021, it was probably just like scheduled, whatever they would have taken on that, then if they sold it at that much of a profit, then they would have a tax burden just based on the original write-off that they took.
Yeah, if you depreciate the machine down to zero and take 100% bonus depreciation this year, and you sell it next year, whatever you sell it at, let's say it's sold at 1,000, you bought it at 5,000, you write it down to zero, we sell it for 1,000 next year, you've got to recapture that $1,000 as ordinary income tax rates. So it's called depreciation recapture. So it's not long-term cap gains, it's subject to ordinary income tax, which is the normal tax brackets that you would fall into. That's the tax rate that's applied to that that sale.
Yeah, and that would be like a certain tax burden that you have. But let's just say, kind of going another level deeper, you purchase more machines that year to get 100% write-off to wipe that, then you wouldn't have to pay it on that.
Yeah, you have no taxable gain. So.
But in terms of like the way that you think about it is somewhat correlated with the price of Bitcoin, where like let's just say right now, like over the next couple months, the value of your machines were to triple. They were 3x the price that you bought them. would you sell them? I mean, I know this is a difficult question, but
yeah, I mean, it's a strategy. It depends what you think is going to happen to the price of Bitcoin, because if it triples, and if the machine triples in value, that means Bitcoin has to have gone up.
oh yeah,
And
definitely.
will it continue
That's not gone up near as much.
right? Will it stay up? Will it stay at that threshold, and will it continue to go up, or will it come back down? And then you wouldn't capture that
I mean, that's
peak
like
of the cycle.
ultimately the psychology, though, is like when everything is that euphoric and elevated, everyone's like, well, it's going to keep going. It's going to keep going. So why would I sell now? And then eventually it slows down. I mean, you've probably seen that chart of like the market cycles where it's just like the emotions that people feel at various points in time. But it's probably good to, like, when you're setting up this mining business, to plan ahead and think like, am I going to try to purchase these machines low when hash price is low and sell them for more when hash price is high? Or am I going to take the approach, which historically the miners that have been the most successful have done that. They have recouped the value of your machine at a multiple to what they paid for it in Bitcoin terms, which has also even happened, versus the people that are like, okay, well, I'm going to purchase my machine and run it till it's like no longer profitable, which the S19, you could have also got that machine in 2020 when it first came out and ran it for 4 years until 2024 when it pretty much was no longer profitable. And you would have mined more Bitcoin than you would have paid for it, which
Right.
is over a 4-year period, which is not very common. It's not, I mean, at least not forecasted with current machines. Like, you're not going to, let's just say, for example, if I paid in 2024, if I paid 0.1 Bitcoin for an S21, it's going to take a long time unless there's some massive drop in difficulty for that S21 to produce 0.1 Bitcoin. I mean, it could 4 years from now, it could hit that point, but with just the pace that difficulty's been going up, it's going to be very difficult for that to happen. So
Yeah,
it's probably good to be thinking about how are you going to react when it gets to that point. Like, are you going to plan on selling your machines, or are you going to try to just run them and hope they ROI on what you spent on them?
well, here's like 5 things that you might want to consider. When your machine is approaching or has like passed the point where its efficiency is meaningfully worse than current generation rigs. For example, the delta in cost per hash is large. At that point, the resale value will erode quickly.
Yeah.
The next point, before a major hardware upgrade wave or like a difficulty spike, when the used market will be flooded and prices drop. The next one, when your machine is still reasonably profitable, but the margin trend is negative, selling while it's still in profit gives you better leverage in the marketplace. At a time that aligns with your tax strategy. For example, that's a really important one. If you want to reduce business assets before year end or realize losses, gains in a favorable tax year, maybe your other income is down. So selling machines in a profit scenario will not cause such a big tax hit. But let's say I have a big taxable income year elsewhere. Maybe I don't want to sell in that year and incur a taxable gain. Because the depreciation recapture and other tax implications, you just want to time them rather well with your other portfolio of income. And then lastly, when you have a deployment alternative, either replacing with newer rigs, like we said before, where the bonus depreciation will offset the gains or the recapture of the sale of the older equipment, that's great. Or you're shifting your capital elsewhere into different, businesses. Maybe you're buying rental properties with the proceeds. So if you plan to exit mining entirely, you might wait for a favorable market, but avoid holding too long if costs are increasing. So there's a lot of scenarios. Those are just 5 things you may want to consider.
Yeah, that's good. I do want to pull this chart up here. This is something that, like, I keep coming across and I mentioned this a lot, is like the periods of time where you can expect to receive a premium on your machine to what you paid for it is typically going to be like we saw it in 2017, 2018, where you have the price of Bitcoin is increasing faster than the difficulty, because difficulty can ultimately be seen as like, I mean, it's just as important in terms of miner profitability as price, because it's your share of the block rewards. Like, as if difficulty is going up, you're getting a smaller share. If it's going down, obviously you're getting a bigger share. And so if you just, and it's the same thing with price. If price is going up, then you're getting more. Price is going down, then you're getting less in dollar terms. And so if you have price going up at a much faster rate than you have difficulty going up, then you could expect your margins and ultimately hash price to improve as a miner. And if that's happening, then hash price is going up, then the value of your per terahash of your ASIC miner is also going to be improving. And so you can just see the two times that this has happened. If you were a miner and you sold in these periods of time, sold your machine, that was a really good time to sell your machine. A not good time to sell your machine would be where you have the opposite, where you have difficulty appreciating at a faster rate than price, because then you'll be selling at unless, obviously, as you mentioned, you have other strategic, just not in terms of like pure economics internally within the Bitcoin market, and like the tax benefits, as you mentioned, that in 2023 you're going to have significant tax burden. You could reduce it by rolling these machines off your balance sheet.
Yeah, so I mean, difficulty is, if we look at the purple line, that's your hash rate, right? So if hash rate is going up, it means more miners are coming online, mining more Bitcoin and giving you less of the pie. So that's what that line in purple represents. That. So I personally bought machines at the beginning of 2021 there on that chart when the price
at the perfect time.
Yeah, well, that wasn't the perfect time because the machines were expensive.
Where at in 20? I guess it depends on where we're looking. Are you talking about like a couple months into 2021? Because then
yes, a couple months into actually probably towards
before or after the China mining ban? Because if you see that dip
after,
purple line, is after
that the dip in the China mining ban was that in the middle of 21 to 22 on that chart. So I bought in December of 21. That's where it was the peak. I think it was like 13,000 a machine.
Before the China mining ban?
Yeah. No. 20. I'm sorry. December of 2021, right before January of 22. That's when the machines went live. So I bought it at the peak.
Yeah.
But my machines were expensive. But what happens is if price comes down, Bitcoin price comes down, the machine prices will come down as well. So they're going to fluctuate based on what the price of Bitcoin is.
Yeah, it's not. I wouldn't say it's that like correlated, where if the price of Bitcoin comes down, then therefore the price of mining is going to come down. It's usually more based around hash price, which hash price includes the price of Bitcoin. So the price going down is a factor, but just as important of a factor would be the difficulty level.
Well, my machines that I bought for 13,000 at the end of 2021 were then being sold in 2023 for like 3,000 and 4,000. So it just takes time. It's going to take a few months, 3 to 6 months for pricing to adjust on machines. And, it really depends though, like what's coming out, what's the new equipment that's coming out, and is there a benefit to paying a premium for the new equipment because it lasts longer? Yes, I think there is, because it'll get you through the next halving without interrupting your business. So like you guys have the hydros. I think the hydros remain profitable through the next halving, no problem. And I think down to like $70,000-$60,000 Bitcoin price point.
Yeah, at 8 cents per kilowatt hour. Yeah, you can weather some severe drawdowns. I would say, yeah. I mean, that's the difference. Is like if you want to get a machine that's closer to the line, the profitability line, where if hash price conditions, market conditions were to decline, you're going to be underwater. Then like that's good. I mean, the benefit to that would be you have a lower capex. you're not going to be paying as much for your machine. And if there's like a massive rip in hash price, then you'll have leverage to that. But you also, like, you could go underwater, so you don't have any cushion. Where if you get a newer machine, you have a higher capex, which could mean a longer payback period. It could take longer to pay it off, but you have much better downside protection.
Right. Right.
Well, I think that is probably good for what we're going to cover today. And I have some other questions that I could bring up that people have had, but I think that's good for today. We covered a lot. And yeah, I mean, do you have any other thoughts?
I think the last thing to consider is we talked about the setup of the accounts, from the checking account to the exchange account to self-custody to the tracking of all this with QuickBooks and Coinly.
Yeah.
And the last piece is, like, how does this all come together when filing taxes, perhaps? Like, that's like the end of the year. We've got to think about reporting this, right?
Mm-hmm.
So, if you're a single member LLC, your profit and loss from Bitcoin mining goes on what's called a Schedule C form inside your personal 1040 tax return.
Yeah.
That's one aspect. If you're a S corporation or a multi-partnership LLC, you would file a Form 1065, or as an S corp, 1120S, separate tax return for the businesses that takes the data from the QuickBooks, and basically you're going to plop it right onto the tax return, and that's where the depreciation magic starts to happen as the accountant starts to add on all those fixed assets that you bought during the year. So that's where everything comes together, and then from there, if it's that separate filing, you get a K1 that goes onto your personal return, and you're done. So
this is something that you got. Obviously, LCL tax. This is something that you help investors with.
Yeah, so we work with people in a variety of different methods. We can do the Schedule C, and we can give you that form, and you would have your personal accountant handle that. Basically, they'd be copying and pasting the work that we did right onto a Schedule C. We could just do the business. We could do the 1120S or the 1065 forms, whatever capacity somebody would like to work with us in. We're pretty flexible. If somebody wanted to come over entirely and have us do everything, totally open to working with them on that. So we try to make it easy. We try to make it simple, and work with the clients to the flexibility that they need.
Yeah. And one last thing that we should probably mention is, when tax time does come in April 2026, in order to change that situation in terms of like you taking 100% bonus depreciation or doing something with a mining structured investment to change the outcome of what you end up filing in April 2026, then you have to do that placed in service in 2025, correct? So you have, that machine has to be hashing before December 31st of 2025.
Correct. That's exactly right.
Yeah. And I sent out an email yesterday on, I think we have all of our in stock machines right now would be the S21 Pro and the S21 XP. And those are just with like procurement delays. Those are still 2 to 4 weeks out, turnkey. So if you, let's just say worst case scenario, it takes you purchase it now and it takes you 4 weeks to get online. You'll be online the beginning of December, and you just made, if that was what you were trying to do, was get online in 2025, then you just made it in.
Correct.
So,
yeah, that's important if people want to start, investing into the space now, buying early now to get set up. Definitely don't want to wait till December.
Yeah. Well, it was a pleasure, Mike, and we covered a lot, and I think it's great stuff. I think people will find some good value in it. So
yeah. Till next time.
Until next time. All right, man. Yeah.
Sounds good.